we're days, weeks, months away from breaking through 73 and squirting up into the low hundreds quickly, in my opinion, on Bitcoin. And then as things get going, it'll go further. We're going to see between 180 and 300 as a peak on this next run. The thing about Bitcoin that makes it so different is that the ledger's out there for everybody to see. And it's triple entry. I mean, it's you and me doing a transaction, but it's also published and everybody can see it. And so, it's easier to store, it's less costly, it's easily verifiable. You can move billions of dollars in minutes as opposed to, try and move $1 billion worth of gold. So in every way, shape, and form, it's superior to gold. And ultimately, it will supplant gold. It'll flip gold and become digital gold. I think it'll become the new Marere, as safe as said.
Lepard's assessment of Bitcoin's potential trajectory centers on the concept that gold always moves first. He points to recent bullish behavior in gold prices as a precursor to a strong rally in Bitcoin. In Lepard's view, Bitcoin's trajectory to $150,000 or higher is within reach, fueled by its status as digital sound money and the current fragility in the financial system. He explains that, historically, precious metals like gold have been indicators of economic shifts and are often the first assets to react to inflationary pressures and a weakening dollar. Lepard believes we're just days, weeks, or months away from Bitcoin breaching the $73,000 mark and potentially heading to levels between $180,000 and $300,000 in the long run, depending on when the anticipated big print from the Federal Reserve takes place.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think 150 is in the bag easily. I think that, I think, so gold is telling you Bitcoin's about to run hard because gold always moves first. And so we're days, weeks, months away from breaking through 73 and squirting up into the low hundreds quickly, in my opinion, on Bitcoin. And then as things get going, it'll go further. The piece that I can't predict is when the quote unquote big print is going to come. I mean, the big print is coming. It's definitely coming. I just don't know when. And that's because it has to do with when the problems get serious enough that the Fed stops the small QT that they're doing, and they took it from 60 down to 25. And when they take interest rates down more aggressively, and by the way, I'm the opposite side of the CME. I think they're going to continue to drop rates pretty quickly. I think the bond market is telling them they have to, and also their interest expense is telling them they have to because they're in fiscal dominance. So, based on pattern recognition and what it's done before, I anticipate we're going to see between 180 and 300 as a peak on this next run. What they both represent, in my mind, are neutral reserve assets that solve Triffin's dilemma. And Triffin's dilemma is the issue that the U.S. has the reserve currency, and therefore we had to print it and grow it, or else the world runs out of money. And so what they made a mistake at Bretton Woods. They should have picked the neutral reserve asset, which would have been gold. And gold is basically the old neutral reserve asset. It's analog sound money. Bitcoin is digital sound money. It's superior to it in every fashion because, and by the way, the reason the gold standard failed for two reasons. One, politics and the law. We went off it. We're not even on it anymore. So, but two, they also created a ton of paper gold, and they were really good at doing that. And that's hours long discussion unto itself. But what Bitcoin offers is, and gold is heavy. It's hard to verify. There've been tungsten, bars plated with gold. I mean, it's got all these problems, so to speak. I mean, nobody even really knows who owns what. It's tough to verify. We haven't audited Fort Knox since the 50s. I mean, there's amongst conspiracy folks, and I'm sympathetic to it. There's some question as to whether we really have the gold we say we have. And so it's a problem. And, because it's hard to know who has what, you're kind of dealing with a ledger that you're not sure is honest. The thing about Bitcoin that makes it so different is that the ledger's out there for everybody to see. and it's triple entry. I mean, it's it's you and me doing a transaction, but it's also published, and everybody can see it. And so, it's easier to store, it's less costly, it's easily verifiable. You can move billions of dollars in minutes as opposed to try and move $1 billion worth of gold. So in every way, shape, and form, it's superior to gold, and ultimately it will supplant gold. It'll flip gold and become digital gold. I think it'll become the new Marere, as Safe has said. And so, now this is not overnight, right? This is over decades, but we're on our way. And so they're really the same thing in the sense that they both are neutral reserve assets. And they both are neutral reserve currencies in the store of value sense. Neither one is really relevant today in the means of exchange sense. I mean, who pays for something with gold? Who walks in with a gold coin and says, settle my debt here? I mean, it just doesn't happen. That hasn't happened since 1920. I think we're moving into a world where there are going to be a lot of currencies. If we have complete dollar fiat failure, we might have one currency, and it might be either gold or Bitcoin. Gold would be the wrong choice, but we'd ultimately evolve to Bitcoin. But my working model is, we're already evolving toward gold as a neutral reserve asset. 25% of the oil trading today is done outside of the dollar. That's new. Used to be about 95% the dollar. These countries are settling with each other in their own currencies. So, rupees and rubles and yuan, they're all trading gold in those currencies and then net settling, they're all trading oil in those currencies, net settling in gold. And that's a trend that's accelerating rapidly since the U.S. grabbed Russia's reserve. Yes, to answer your question, 2035, yes. I think there'll be probably two competing neutral reserve assets, gold and Bitcoin, with gold on the way out and Bitcoin on the way up. And I think the dollar will be a transaction medium, if not gone, by 2035. I kind of place the end of this whole experiment at the 2030, 2031 or 2 area. If you kind of look at fourth turnings, this fourth turning is clearly about what is money. I give Robert Breedlove credit for that, coming up with that notion. And we're going to decide what money really is. And money was the PhD standard since the Fed has been created, and that's about to die. The PhD standard ain't going to work anymore. And so money is going to become, for a while, gold and Bitcoin will coexist, and then eventually Bitcoin, I think, will supplant gold. That's kind of how I see it. And, these fourth turnings tend to last 25 odd years. And so if you kind of consider 08 to be the beginning and do the math, you're in the later this decade, early next decade.
Lepard's concerns extend to the likelihood of hyperinflation and the potential for a debt crisis. The historical examples he points to, Germany's Weimar Republic, Argentina, and Venezuela, serve as cautionary tales of what can happen when governments excessively inflate their currency. With debt at unsustainable levels and no political will to address spending, Lepard anticipates that the U.S. government will opt to print its way out, fueling inflation and leading to a loss of confidence in fiat currencies. He emphasizes that this scenario could lead to a Gresham's Law effect, where people flock to assets like Bitcoin and gold, driving their values to levels that seem unimaginable today.
The debt will start to collapse in the sense that people will shun the debt, and maybe it won't even be money good. The U.S. federal government debt will probably be money good, but other debts may not be. And as that becomes the case, as we now know from multiple Fed chairmen and other people in our federal government, they are never going to let the U.S. default because they have a printing press and they can print the money necessary in order to, nominally meet the obligation. But there's a big emphasis on that word nominally because, if they're printing the money to meet the obligation, well, that's just one step removed from the banana republic and, republics. And, we know how those tend to end. Argentina and Venezuela are a couple of good examples where hyperinflation has taken place. And if you want to go back further, there's a case of it in Germany and the Weimar Republic and so forth. So, to me, what's going to happen is we are headed toward a major debt crisis. We're, as Lynn Alden points out, we're in fiscal dominance right now. There's no will in Washington, D.C. to solve the problem. There's no discussion of cutting expenses or spending. And they literally have to continue to inflate and debase the currency to keep the system running. They could stop debasing the currency and the system will collapse, but that looks like 1929. That looks like a stock market falling and the value of everything falling. And they've made it pretty clear they're not going to do that. I mean, Bernanke set us on this path when he gave that speech back in 2002, deflation, making sure it doesn't happen here. And he says, the U.S. government is blessed with a technology called a printing press. And, therefore, I believe that we can print whatever money is necessary, we're not going to have deflation because to the degree that debt collapses and creates deflation, we can print to prevent that. And debt is inherently deflationary. You take on debt and you're spending, you're bringing future consumption into the present, but in theory, you'd have to pay it back in the future, which is a deflationary event. And, it's a classic example of just, children wanting to have their cake and eat it too. And that's really what the whole Keynesian school is all about. I mean, it's a bunch of children who, basically think there's a free lunch.
Yeah, agreed.
They're just wrong. I mean, they're fundamentally wrong. And as our friend, as you're my good friend, and wonderful guy, Greg Foss says, it's just math. I mean, this isn't really an opinion as much as it's just a mathematical fact. By the way, Tom, I think the next one is going to be bigger. And that's one of the things you've seen. They've gotten closer together and they've gotten larger. Mm-hmm. We kind of had one in 2000. Okay, they cut rates. They got the housing bubble going. We had one in 2008. Nope, new stuff. They're QE, printing money, ZIRP interest rates. Okay, fine. But they kind of got a recovery going up. The repo blowout in 2019, back to QE, then COVID. I mean, it took Bernanke, from 08 to, 11 or 12 to print $3 trillion worth of money. I mean, in COVID, Powell printed $3 trillion in, 6 months. I mean, and so the Fed balance sheet's now $7 trillion. I think it's going to 25. And, what's going to get unleashed here is just horrific inflation. And the mistake that I think a lot of people are still making is they haven't picked up on this, because we did have a 40-year deflationary trend from the early 80s until 2020. I mean, peak deflation, in my view, was March of 2020. A lot of reasons for that. The opening up of China and a lot of cheap labor and manufacturing capability drove deflation, and technology drove it too. Mm-hmm. But, now with the monetary situation that we've got going on, inflation is going to be a part of our lives. It's going to become a bigger part of our lives. I mean, the mainstream narrative is that they're going to land the plane, inflation is licked, we're going to be back down at 2 or 3% and party on, buy stocks. And I think that's wrong. My belief is that, that we've passed the event horizon. As mm-hmm. Lynn says, nothing stops this train. The next print's going to be even bigger. More and more people are going to come to realize what we've come to realize. And a mass version of Gresham's law is going to take over, where Bitcoin and gold are going to go to prices that are unimaginable today. The cost of living is going to go to prices that are unimaginable today. A lot of people are going to get squeezed, which is terribly sad. And there's going to be a political revolt, and somebody like a Robert F. Kennedy or somebody else, or a Ron Paul type, but there'll be a new one to emerge, is going to stand up and say, guys,
enough.
Enough. The problem here is the money is broken. We have absolutely got to return before we go full hyperinflation. And it's possible we'll go full hyperinflation before the political will emerges, but we've got to solve this problem by going to a sound money piece, some sort of a sound money.
As Lepard sees it, the path forward will involve political and economic upheaval as people increasingly recognize that the root issue lies in the current monetary system. He mentions the possibility of a political shift, with figures like Robert F. Kennedy Jr. advocating for a return to sound money. Whether the transition is gradual or rapid, Lepard is convinced that Bitcoin and gold will emerge as safe havens, with Bitcoin ultimately taking the lead as the preferred reserve asset. The shift may take years or even decades, but in Lepard's view, the direction is clear.
Please like and subscribe my channel.